Welcome to this little strategy breakdown video. I want to present my interpretation of the ORB strategy using the 5 and 15-minute opening range. So what I do is I mark out 930 and look for, like, right here, data low or new week opening gap highs like this right here, just to get like an idea how market could move at open. Then as I said, I will mark out the 930 open and the high of the first 5 and 15-minute candle. Let's do this real quick. So we have our 5 and 15-minute high here, like this, and we have our 5-minute low here, and our 15-minute low right here. So ideally you want to wait for 9:45 to take a trade. You could also take one after we make the 5-minute range. If we get like a super clear entry, I would usually trade that, but yeah, as I said, not always. So as you can see, right here we put in that 5-minute range, swept it with the first 1-minute candle that isn't part of that 5-minute candle, pushed upwards and respect this gap right here. You can mark that out too, just like that. Got like a breakout closed below. Got a little bit of a chop around. Pushed up again while putting in the 15-minute low. I know we have two 15-minute gaps right here, and I think they look something like that, like this. You saw we respected one, so you could potentially assume for a bullish movement, but you are smarter. So if you mark out, or you pull out your fib and mark out the 5-minute range, and as you can see, we pretty perfectly tapped that 0.705 right with this candle at 9:46, so the second 1-minute candle after the 15-minute range close, and got like a super strong rejection, which usually would be already an indicator for me to like say, okay, we might have bearish movement for the next hour or two, and then I start looking for an entry. I think on this day I entered right here. We can see we got a clear breakout out of the 15-minute, 5-minute range, and even out of the 15-minute range. Got like a little fair value gap right here. And for me, more interesting than the fair value gap is the tap right onto the low of the 15-minute range. So let's mark that out here. So now we already can see we have this retest inside the range and we reacted. We have this one right here and we reacted. We got the two breakouts, or let's call it one breakout. And I think I took the trade like something like this. I think I have my stop right here. And my target was CE of the new week opening gap. I think I closed it right here at this low, but yeah, you could take like partials right here, maybe even here maybe. Yeah, I usually target 4-hour gaps and take partial at 15-minute gaps, unfilled of course. For me, I noticed we often like get a strong move to the minus 2.5 level of the 5-minute range. So 2.5 times the 5-minute range. So this, what is it? Roughly 100 points. And this move, yeah, roughly 300, 400. So maybe even minus 3. And I usually target that. For your stop, you could, or if you want to be really safe, you would put it right here. But we don't want a 130 point stop, so you could have put it here. 100 points for me is still too much. You could take it. It's a 2.16 risk reward, but for me, or in my understanding of price, we don't have any reason after reacting from this level right here and pushing back down to go back up. For me, there's no reason, so you could put your stop here, maybe even right here above this candle close, maybe even here. So you see there's some room to play. So in this trade we got like a 3.5 RR, which is pretty solid, I would say. As I said, it's really important to wait what really happens and don't like assume how the 15-minute range could look like. So mark out that. So that's our first 15 minutes, and that's the first 5 minutes. If you just forget what we see here, we push down into a 15-minute gap, sweep it, and react. But that could be a bullish indicator, but we know we kind of could see a retest or something. We even swept the perfect CE with this candle right here. Maybe if we would have inversed this gap, you could say, okay, we kind of want to push higher, but in this situation, even with this little sweep here, we can't really trade that. So we need further confirmation. For me, also pretty interesting is the first presented fair value gap. Can mark that out right here. It's super tiny, or can't even like expand it. And as you can see, we not only reacted from the OTE, but also from that first presented gap. So you even could have theoretically traded something like that with targeting that minus 2.5, and you see we are at 8 RR, which is, I would say, pretty good. I experienced a win rate around 60 to 70%, with sometimes pretty good RR, sometimes maybe 2, maybe 1.5. Usually I go for at least 2.5, but if I see a pretty good setup, just the target's really low, take out partials and hope for the best. Yeah, in this case, I would say that's rather a pretty clean setup. You often see like days where we put in the range, push up and just accumulate in this range, and I don't know, maybe at 10:30, 11 we just get like a random move. For me, that's a sign to not take the trade. I usually look for getting in a trade before 10:30, just because the volume slowly starts to get a bit lower, and I experienced I take a lot of L's if I enter after 10:30. And maybe we can even show you another example. It would be pretty interesting right here. Yes. So that's Friday. That was we had CPI here at 8:30, and for me this was pretty interesting because, as you can see, we have market open right here, and we stayed in this CPI range. So we just accumulated right here, and at market open. So let's mark out our range again. That's 5 and 15 minute high, and we have that's our 5 minute low, and that's our 15 minute low. We got our 5 minute range, just like this. This candle here is the first candle that isn't in the range anymore, so 9:35, because the new 5 minute candle opens. And as you can see, we kind of swept the low, pushed a bit up again, and just pushed down again. So as I said multiple times, you need to wait a bit. For me, interesting because we have like these equal lows, relatively equal lows right here, and not really something else. And we had I think we had a 4-hour gap right here. So we could mark that up too. Yeah, we had these lows swept. We had S&T right here, which is usually here's an indicator we could use the range low as a point of reversal and never really get back. So let's mark this out too. And I ended up taking a trade right here. We got that fair value gap right here, inversed it, and I entered right on that inverse high. Target, I think, data highs or the range high. Let's call it data high. If I stop right here, R is 2.4. That's okay for me. And as you can see, I took a trade before we put in that range, because I know we get wicks on the 15-minute candle. We put in the down wick, sweep these lows, and push up. And we get a range breakout. Pretty sketchy here because we sweep data high, broke down, even retested the 5-minute range low right here. And if we pull out our fib again, no, not like this, like this, Yeah, that's close enough. You can see we retested the CE of the 15-minute range, right? And I'm pretty sure if we look at the 2-minute, we had some gaps here, even inverse that, okay. 3-minute, nothing. So you see it's a bit sketchy to like determine, okay, are we pushing down because we tested CE already here, pushed up, reacted from that gap, retested the high, pushed down, and then pushed up, and we got like, I think that's pretty hard to trade just because we get like this leg up and down, even get to that low right here, and then push up further. If I wouldn't have taken that trade, I probably would have entered here with the target maybe here, maybe even that minus 0.5. So half the movement we got in the 15-minute range. Stop probably also here. That's like a 2.5 also. I would have probably stopped break even right here. But yeah, as you can see, we just inverse the gap right here. So you could potentially re-enter and put your stop right here. Target also this, and we even get a 3.7 RR. So you get it. I often take mostly two trades, either a re-entry or if I see, okay, we swept like these highs, we respect the gap, I want a short right here, maybe I would have put my break even right here, but you could argue to take a trade like this with target at the range low and put your break even right here, get stop break even right here, and then you see, oh, we kind of retested this area here, okay, now I can enter in along. It's a bit of a, you kind of want to get a feeling for how market moves and use that rather than just the confluences you get. Another thing, I think I told you we can get a breakout, we can get a sweep like that, a sweep this highs, and then you could also see a push completely down the range and even further. But for me, combined, the orb combined with the high time frame bias, so the 4-hour gap sweep of these lows, was a pretty strong indicator that we would be bullish. And so I was already convinced right here at that PFVG and took that. But kinda, yeah, I would say that day is to consider to be bullish, even if we came down here. But no, that's lunch. Yeah, that's PM. So I think that's okay because I don't trade PM that often, probably never. Yeah, I think I will put you a little conclusion in the description. Maybe even just short right here. Yeah, I hope you liked the video, and if you have any questions, please leave them down in the comments.